Lance is ready.
Hello and welcome back to the Get Rich Slow podcast. I'm your host, Adrian Shermer, and I'm joined by my co-hosts, Lance Johnson and Rob Delavan. And today, continuing our series, our 8-parter on taxes, the ever-exuberant Sue Hort.
Awesome.
Hey, everybody.
Hello.
Hey.
Good morning.
So we have, this is episode 6 in an 8-part series. This one is real estate and taxes.
Woo.
We could have 100 episodes just on this,
Maybe we will.
but we're going to just touch some high points for you guys today. Real estate and taxes, your questions answered. And we're going to jump right into it. But before we do, you can find us at our respective websites. Sue as our special guest host, roi-tax.com. Mr. Brilliant at the basics himself, Lance J at roi-financial.com. Mr. Shermer, he's brilliant too, but lending isn't basic. At directorsmortgage.com, and myself, delavan-realty.com. And we're going to be speaking with Sue with ROI Tax, and she'll be answering some questions in regards to real estate and taxes. Again, this is 6 in an 8-part series. In our last episode, we learned how to make standard deductions versus itemized deductions simple. And it was a hoot, wasn't it, Sue?
Yeah.
And a warm welcome to Sue. Gentlemen, we're in for a treat. There we go. Okay. I'm going to throw it. Adrian, why don't I throw it over to you for questions? We have three questions. Well, actually,
Absolutely.
I'll do the first one. What are the tax benefits of having a vacation rental?
Okay. So a vacation rental, as opposed to just a regular rental, is where someone says, I want to own rental property. I want to have some tax advantages. I want to be able to have something to put money into, gain some equity. You know, it's a diversification from maybe their stock portfolio. But the important thing is that as a vacation rental, it's in a place where you want to travel, where you get to spend at least 2 weeks a year just enjoying. But anytime that you go there to repair, fix up, visit, that can be used as a vacation as well. So you're getting some rental income out of it because you're renting it during those peak times of the year, but you're also being able to use it and enjoy it. And maybe you want to retire there someday. But the important thing is that you're getting some rental income, and you're also being able to use it. So your tax advantage would be if it's coming in that you're losing on it, then you've got a loss that you might be able to use on your tax return. But it's mostly a paper loss because you depreciate the property, even though it might be appreciating. I know it sounds complex, but that's where people go when they're looking to have a vacation rental.
And Lance, my question for you, because we've run into this many times, is it typically, in your experience, the first investment property somebody buys?
Necessarily. But let me piggyback on what Sue talked about. I do believe in diversity. I don't think everybody should have just stocks and bonds. I'm a big proponent of real estate, as you know, and the tax benefits of it. So with that all being said, some common scenarios that occur is some people want a vacation home, but then it's very costly to maintain a vacation home that you sometimes only go 3 or 4 times a year, you know, but when you go, you want to spend a week or 2 or whatever. And so, you know, the discussion becomes, why don't you make it a vacation rental? So it's your vacation home that now we morph into a vacation rental, or it's you're used to having a first-time home buyer they want to upgrade their house, so they make their old house a vacation, their first time home, they upgrade, and then, and we'll talk about this, then they want to do something about that first home or the next rental as they enjoy the benefits of a rental income. They explore either duplexes or quads, or they do vacation rentals depending on their personal priority of what they want in their portfolio. And I really like vacation rentals. If I had it my choice, I'd have 30 vacation rentals all over the world. And so when I
Same.
travel, there's tax benefits. And so that would be my choice.
So the concept there, and obviously there's lending. I mean, this is a whole series of episodes, but to sum it up, Sue, what I heard you say is find somewhere you like and probably have some tax advantage from depreciation, and then you have an investment, and then you're diversified in somewhere that is a personal benefit, but it's also probably going to appreciate over time.
Exactly.
Here's the
And
short of it.
The beauty of having the vacation rental where you enjoy is, it's not going to be in your next door neighborhood. It's going to be at a place you enjoy going to. So while you're going there, you can deduct the travel to get there. You can deduct some of the meals and the time because you're working on it. You're doing a little bit of upkeep and maintenance and visiting and make sure the property manager is doing what they want. So you're getting a tax benefit out of something you're also enjoying. Plus you're getting some rental income for the months that you're not there. So it's a real nice thing to have in your portfolio.
What a win-win.
So jumping into the next question, and Adrian, I wanted to kind of do this, explore this a little bit with you from a tax standpoint, but I own multiple homes and rent them out. So from a tax standpoint, starting with Sue, what should I do to plan properly for taxes and for the tax benefits there? So we've gone from vacation home to now multiple properties.
Yes. So I have several clients with that. They've decided that they enjoy having that rental income. They're happy, to have that. So they've decided to expand into, 2, 3, 4. So the key is there's one of two ways you can go. Use a property manager, pay that extra fee so they're taken care of, so that you're not the one who has to do all the work or get the calls on the weekends, fix the toilet. So just make sure that if you've got that property manager, they're giving you statements every year. They're calling you regarding major improvements or repairs that you have to take care of. And then tax-wise, you've got some that are maybe making money, maybe you paid off their mortgage, and some that are losing money because they're more expensive, and you can offset those, but you're still getting that rental income. Then there's the other side of the coin, is if you're somehow involved in real estate, for example, as a broker, as a property manager, or something of the like, you then become, you can be a real estate professional if you're spending more than 750 hours in a year working with these properties or in your profession. And then you can deduct as much losses as you have during a year. Some years you're going to have more losses than other years, but you can take advantage of that if you're a real estate professional. A whole other direction that I could go into, but there's a couple of ways that you could use tax-wise with rentals.
Lance and Adrian, care to expand or add?
Well, so multiple homes pose some opportunities, like Sue said, is depending on your other income, so your regular income, not passive income, there's that $150,000 threshold where you could write off the losses. You can have some properties that cash flow positive significantly and others that don't. And so then you can offset, positive cash flow with negative cash flow. If you have a negative, you can carry them forward for future, so that's good. And then, multiple homes, there's pros and cons. There's single family homes, there's duplexes, there's quads, there's eightplexes, and so forth. And so there's just this progression when you get into rentals and you go down that how do you help? How is it just a bunch of small homes? But then when you realize a good rental is one that doesn't have a loss, and so you're looking for those. And then when you have a bunch of those, you're going to get those in duplexes and quads because it's the same land cost with multiple income streams. And so then you compare that to running a business like an 8-plex, 16-plex, or a vacation rental where you hire people to manage it. So it's just what's the sophistication that this client wants to deal with in real estate. And there's a whole progression that can occur.
Oh, and throughout that progression, there's hey, how are you going to do the next one if you're in a portfolio that's increasing? If that's how you're bent.
Yeah.
And that really gets down again, multiple episodes on this, but Adrian, from a lending standpoint, you can't write down too many losses because then you can't get qualified for a loan, right? For the next one.
Sure.
Yeah.
And, sometimes I get this question. This is the worst question I got. I actually just got it last week, which was, how much income should I show so that I can get qualified for a loan? You can't ask me a question like that. It's, there's a huge problem there. What can you learn from your lender about these kind of write-offs? Absolutely nothing, because we don't know your full financial picture. The difference that being able to write off your overhead on a rental is for a person who made $30,000 last year and someone who made $300,000 last year is totally different. So you've got to talk to your CPA and you've got to figure out what the pluses and minuses are to this situation. For some people, rehabbing homes, doing renovations, you may find that you get that quote unquote discount because it is a write-off and you make enough money that you're writing off the highest tier of your income. But if you don't have a lot of money and you're purely on the income of your rental properties, then it might not be as much of a, air quotes here, discount, is what I'm going to call it. Write-offs have compounding results the higher up the income chain you go. So you've got to meet with your CPA, and you've got to have the kind of CPA that you can meet with before the tax season. You're not just looking back going, what could we have done better? You're going forward and saying, hey, I'm looking at investing. I'm talking to my financial planner. I'm talking to my CPA. Let me get the pieces of information I need from each expert and then make an educated decision.
How do we always come back to planning?
Crazy.
To win at
Almost
this
like
financial game. It's like
who
almost
have
like
wealth.
that's the message. Love it.
All right, last one. 1031 exchange. I get this question all the time. And once again, I'm just going to echo it. I always defer to the CPA, because if you're asking your lender, just don't. I'm sure some lender will give you the answer, but they shouldn't, because they don't know enough to give you the right answer. So it's kind of funny, you ask enough people a question, you'll eventually get the answer you want. We want the right answer, though. So we go to the experts and we get the expert advice. Sue, what's a 1031 exchange?
Ooh, okay. A 1031 exchange. You have one rental property, but if you sell it, it has a huge gain. So you decide, I'm going to do a 1031 exchange where I sell the first rental property. The money goes to a 1031 exchange agent, almost like a title company, a trustee. It's held there. I purchase a second property of equal or higher value. The money from the exchange goes to purchase that second property, and I don't have to pay on the gain as long as I don't take any money out. All the money goes into the second property, but my second property now has a reduced basis on it by the amount of the gain from the first property. So I pay no gain now, I'm deferring it till later. That's the purpose of the 1031 exchange. Buy another property, defer my gain until after I sell that second property, or however that works out.
Right.
Did I?
And yes, you did. Let me So
it's not a
I'll
tax
give you
loophole.
guys a scenario, and this is fun
any
to
stretch.
hear how Lance and Sue talk about these things. So usually where I run into them as a real estate broker
Mhm.
is somebody has 2 or 3 properties and they're smaller, like say they're the houses that they bought back in the 80s that were when they were cheap, or even in the last 10, 15 years. And they want to trade 2 or 3 properties that maybe are older or have appreciated in value. They want to sell those, but of course they appreciated quite a bit. And then they want to consolidate into a bigger property, say multifamily, or go from residential to commercial, or that sort of thing. So comment on that. And Lance, I know you've experienced an incredible amount of that sort of thing too. So.
Well, so on 1031 exchange, I mean, one comment I'd make is it's of equal value or more. So
Mhm.
downsizing, that's a trickier. You can go from 1 property to 2 properties, but the total needs to be greater.
Right.
And then if you have loans, you have to have equal loan
Mhm.
exposure or greater as well.
Right.
Mhm.
Right.
And so that's 2 to qualify. There are a set of rules and instructions. So the agent, everybody I tell that, let's do some planning, let's get with the agent, and there's a
Yes.
set of rules. You do not want to mess this up.
Right. No, you
No.
There's nothing worse than going in hoping not to go through this whole process, and then you mess it up and you have to pay the taxes and you wish you never sold the original property, right?
There's no
Right.
undo button here.
Right. There's no undo
Right.
button. Exactly.
You don't come to your CPA and say, I sold a property and then I immediately bought another one. Is that a 1031 exchange?
no.
Yeah.
There is no after the fact.
How to
on
make your
this one.
CPA cry.
Yeah.
Yes.
And then
you.
1031 is a like exchange. So you get into issues. If I'm in a partnership with 3 people and I want to 1031 exchange my portion into a single, I believe there's some issues there
Correct.
that can't be done. And so, like exchange is a very important part. And
Mhm.
it's all about just pushing that tax bill down later on in life instead of dealing with it right now.
Mhm.
And so that's just the key to it, is going through the process of figuring out whether it's vacation rentals, rental to rental, and the rules of moving that and getting to, and let's just say, a newer, better rental, whether it's vacation or single or duplex or quads or whatever. You're just trying to take the original one and not pay the taxes on the gain with the depreciation and move it to a better one. That's the goal.
And that's the summation. And over the course of 10, 20, 30, 40 years of financial advising, tax planning, lending, real estate brokerage, I mean, this is an interesting topic because we all touch it at one way or another.
Yeah. Truly.
It's probably a lot more common than a typical person would expect. So
The goal is to defer it until you die.
right.
And then you get a stepped up in basis.
Then we pull in the estate attorney, right? And then they tell us
Yeah.
what happens then. But
the IRS
actually,
rolls their sleeves up.
Yeah,
But-
that's a whole nother animal. Yeah. So,
okay. But this just dips our feet. And by the way, we will have references for our material here. There's a good article that defines things, as we discussed, on cwscapital.com, and it's labeled "What is a 1031 exchange?" Also, the irs.gov site has a lot of resources on that. We'll include those in our show notes so that the audience can reference that.
And I'd like to make one comment about, what are some of the applications on 1031? Some people, ran to Oregon and then realized there's a bunch of property taxes and additional taxes. And now, as they get later on in life, they want a rental that's not necessarily in the state of Oregon with all the extra taxes, because there's other states that have different taxes. That's, that you're looking for those like exchanges to improve your tax bill later on for estate planning and or income taxes. And
Right.
so,
Right. Huge conversation.
yeah.
Love these topics. We're just dipping our toes in here, but thank you so much, Sue, for gracing us with your presence during this tax season. We
Mm.
love wringing out every drop of wisdom you have to give to us.
Thank you.
And the best way to find Sue, again, is to visit her website, www.roi-tax.com. That will
Yep.
also be linked in the show notes. And please stay tuned for our next episode in this 8-part series with Sue. In the next episode, we will be learning about year-end tax planning and why it's important. Another barn burner. Oh boy. These are good ones.
I love that topic.
Yeah.
We're going to have a blast. All right.
All right.
Until next time, thank you all for listening.